Okay, Travis, today we're going to talk about something that's been quietly changing over the past decade or so and has a huge impact on estate planning. It's the federal estate tax exemption.
Yeah, and I mean, if you look at the data, Steve, the increase has been pretty dramatic. I mean, if you go back to 2010, the federal estate tax exemption per person was $5 million, right? Remember, we did a lot of planning around that with different types of setups and trusts
Techniques
and
and
so forth.
all.
Yeah, then now you fast forward to 2026, and it's projected to be $15 million per person,
Big change.
or $30 million per married couple, right?
Yep.
So quite a shift.
That is quite a shift. It's a massive shift in a very short time frame. For listeners who may not know, the estate tax exemption is the amount of assets that you can pass to your heirs without having to pay that federal estate tax.
Exactly, and if your estate's below the exemption amount, I mean, there's no federal estate tax owed, which is nice, but anything above that threshold can be taxed at rates up to 40%?
Yeah. And these numbers you're talking about.
Yeah, but that's why the exemption numbers matter so much to long-term planning, because it's 40% is a lot of tax.
That's a lot of money. And what's interesting is the exemption hasn't just crept up gradually, as you mentioned earlier. It's jumped significantly at certain points. One big jump was in 2018 when the exemption more than doubled from roughly that $5.5 million to over $11 million, just like that.
Yeah, so the planning we did around the $5 million number, like a lot of it just became obsolete, right?
It really
yeah,
did.
So that was tied to tax legislation, Steve. That shift you're talking about to 11, and that significantly expanded that exemption that we're talking about. And since then, the number has continued to increase each year with inflation adjustments, which is why we're seeing it climb towards that $15 million level in 2026.
So, Travis, if you're listening and thinking, well, my estate isn't anywhere close to that 15 million or 30 million, does this even matter to me? The answer is still yes, because estate planning isn't just about taxes, is it?
It's not, Steve. I mean, taxes are only one piece of the puzzle. Estate planning also includes how your assets transfer to your heirs, right? Protecting your heirs' interests, managing trusts, and making sure that wealth moves efficiently to the next generation. Because if you don't get it right, it could be held up, it could be taxed. I mean, you could run into a medley of problems.
That's true. And another key point here, Travis, that you're alluding to is that tax laws change, right? And so what we see today may not exist 10 and 15 years from now. The exemption could increase further, or it could decrease depending on our future legislation.
You're saying that Congress will change the rules?
Oh, wow. Yeah.
So that uncertainty, Steve, is why planning ahead is so important. I mean, some families like to take advantage of the higher exemption levels now through strategies like gifting, trust structures, or transferring appreciating assets early.
Yeah, that's true, Travis. The idea is simple. If the exemption is historically high today, some people may choose to use part of it while it's available now, rather than assuming that it's always going to stay high.
Before they change the rules?
Correct. Again.
I think it's important to remember, though, every situation is different, right?
Yeah.
Estate planning should really be tailored to your family structure, your family's assets, and probably most important, just your long-term goals, not just tax code.
Yeah, you're right. And that's where working with advisors, like a financial advisor, a legal advisor, a tax professional, can make a big difference in actually coordinating those strategies to help ensure that your plan actually does what you want to do, not only today, but into the future.
Yeah, the rules are going to change. Your plan might have to change with it, So takeaway here, Steve, is the estate tax exemption has grown from $5 million in 2010 to around $15 million in 2026. And that change has really reshaped the landscape for estate planning strategies and so forth.
That's right, Travis. And regardless of where the number lands in the future, having a thoughtful estate plan is still one of the most important steps in protecting and transferring your wealth to the next generation.
Yeah, exactly. It's not just about minimizing taxes. I mean, it's important. I mean, we're all trying to do that, but it's not just about that. It's about making sure your legacy is handled the way you intend it to be handled.
Yeah, and if you have questions about estate planning or have these or how these changes might affect you, reach out to your advisor or us, and we can start a conversation early so it's not a fire drill for you when something happens in the future.
Yeah, it's not a conversation everyone likes to have, but the earlier you can address it, the better off you're going to be.
Absolutely, Travis. It's been great. I look forward to it next week.
Look forward to it as well.